Well, hello traders and investors. I'm L.A. Little and this is your daily NeoTA wrap. Take a look at these markets. We're doing it from a neoclassical perspective. And what is that? Mumbo jumbo, right? It's something that I created. I was the founder of neoclassical, a different way of looking at the markets, kind of a throwback to the early 20th century trading where you're looking at the tape, you're looking at supply and demand on the tape, you're using that to make determinations about what the market's going to do next. I do this show 4 times a week, every Monday through Thursday, broadcast at before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L.A. Little. And if you want to subscribe to it, just reach up in the right-hand corner and do so. Anytime I push content on that channel, you'll get a notification. You can watch it. As for what these markets did today, we had some pullback over in Europe that's spilled over into the States. NDX was still trying to push up. We had but Apple doing a multiple swing point breakout, and that was holding the NDX up. And Russell on the other end of it was trading to the downside. When I talked about Neoclassical, I want to take a few minutes and show you a good example of what it means. This is the Russell as of last night. Actually, it's got today's trade in it, but we haven't updated the derivative data, right? The data that gives you these swing point lows, which are these L's that you see, or the H's that you see, which are highs. These arrows that you see, which are trend transitions. In other words, trend has changed. Trend changes when it goes over or it goes under a swing point. There's a swing point there. That's what it's trying to get under, right? It can't quite get under it yesterday. 134.80 was the close. Actually today is 134. Yesterday was up here. So it just gets under it today. But of course, we haven't updated these charts yet on this one that I'm showing you. But if you do look at the transition that actually has taken place here, and we flip to the updated chart, it's moved to sideways. Now, that's not a big deal when you're looking at this, but what is a big deal is we knew this was coming, right? And we knew it from our MTTFs. Now, what is an MTTF? Mean time to failure. It's no different than a light bulb, right? Light bulb comes off the factory floor. At some point, it exhausts itself and it doesn't work anymore. It stops working. Well, trend is no different, right? This is trend. It's a bullish trend. And the MTTF 70.9, that's a measure of the probability, the cumulative probability of failure of that trend. Now, that's not just a probability, that we're doing statistically. That's actually a probability based on the entire population of trends over a 15-year period where we've looked at those trends for this time frame, for that type of trend, and said, how long do they last? Once we know that, then we can see when this one started, and we can see how long it's going to last. Now, it's not going to give us an exact number every time, but when you start getting into the 70s and 80s, you know this trend's getting extended, and it wants to change. It wants to transition, and the only way it can transition is break a swing point. That's what it does tonight. Breaks a swing point low, transitions the trend. Is that bad? No, it's good. That's exactly what you want, right? You want to get under that, get under this, transition that trend, and then that MTTF will reset, which is exactly what you see here. It's going to sideways, and it's just started. And this is faster in terms of how long does it take than either bullish or bearish. It doesn't take all that long to extend a sideways trend. And because we know that this thing will transition again. Now, where can it transition? Well, it can either go to bearish. That would be a break of these swing point lows. So in other words, if we came down here and broke these, that would be the bearish trend. But the more likely case is it's going to go back up and break a swing point high. And the lowest one above us is this one. And if you break that, what are you doing? You're breaking out You're going to get another push to the top side. And what does that do for you? Well, since trend is going to then transition back to bullish and is going to be very young, it can last for another 6 or 7 weeks. That's neoclassical, folks. That's one aspect of it. That's trend transitions. That's trend itself. We didn't even talk about qualified trend. We don't have to talk about that. Changes your probabilities a little bit, but that's getting into the details. If you want to make money, you got to have a plan. You got to have something that works, and it works all the time. It doesn't care, what phase of the moon, or it doesn't care about, a lot of people like to equate this to RSI. This is not RSI. RSI is a measure of moving averages and crossovers, or actually extensions of those. The MACD, the crossover in the MACD, again, moving average based. Almost all of the overbought, oversold indicators, and I've studied most of them, are about moving averages. They're trailing. This is a probabilistic measure, right, of how much longer this trend should last. And that is not in the past. It's a pretty good measure of where we are, and the fact that you should be more careful up here and wait for the trend to transition before you do a lot more on the buy side. And this is going to be the buy side. It's not, this is not over. And there's other reasons for that, and I could show those to you. But I'm just telling you, the trend has a ways to go. When we look on a longer term time frame, this is a bullish market. Even if this was the top, it is going to take a while before it ever rolls over, and really starts to pummel to the downside if that's what's going to happen. The thing that people like to tell you is they know where things are going to go. You don't know where they're going to go. You know the probability potentially, but most don't even know that. They just throw stuff out there at you. Neoclassical actually has documented the probabilities over the last 15 years and has a pretty good idea about what really is going to happen based on supply and demand. Folks, if you want to quit losing money and you want to make money, you ought to think about what we have to offer here, the community that we're offering it through with the TA Today site. It's a community. If you want to find out more personally, just drop me an email. I'll talk to you about it. I'll show you a little bit around the horn and show you how things work. But, for the most part here, it's not a tough system. I documented this in a book 6 years ago. That book, trend model, the neoclassical model, brought me through 2008 without a scratch. We had a 6% gain that year. We've caught most of the upside on the years subsequent, right? And since then, it's a model that works in up and down markets, so check it out. As far as the markets, there's not a lot to talk about. That's why I kind of spent today showing you this. You're getting the trend transitions. You're getting them here. You're starting to get them elsewhere. I want to show you one other thing that's going to kick in tomorrow. That is another neoclassical measure. And let me pop that up for you. It has to do with the tech sector, the one that was hot today. And let me grab that for you. So it was in the XLK, which is the technology sector. And what you had happen here in the technology sector today was a test failure to the upside. And what does that mean? Well, again, going back to your swing point highs, you see the H's here, right? Well, eventually you come up to test those things. And today we actually did come to test those. The price points are there. And if we look at the numbers on them, 49.40 on both of them. And what did we do today? Or actually, we did it yesterday as well. We got over it, 49.47, closed under it. Today, we do the same thing. And we also closed under yesterday, and we closed with slightly less volume than yesterday. That's test failures. When I said at the top of the show, you look at the market, you let the market tell you what it wants to do, It does it through test. It always does it through test. If you know how to read the test, you can know what's going to happen in the near term. And that's what tests do for you. And if you're doing it on the daily, you know what's going to happen on the daily time frame. If you're doing it on the weekly, you know what's going to happen on the weekly time frame. If you're doing it on the monthly, it's the monthly time frame. Again, you can know on any of those time frames. It's just that the latter two just take a little bit longer to play out, right? And if I went intraday, I could do the same thing there. 15 minutes, 30 minutes, it doesn't matter. It's the same. Test failure. This thing's going to try and pull back tomorrow. If that's the case, the guy that broke out today, Mr. Apple, is probably going to struggle. Let's see what Apple looks like, because Apple was actually breaking out on multiple time frames today. And here we can see where it broke out. So here's the breakout. It's suspect. It's red. That means it has a slightly less slightly less probability of continuance on that trend transition. In other words, the break. Here's the swing point high. It broke, right? You compare volume on this bar to volume on that bar. You see if it's bigger or smaller. If it's smaller, then it's suspect, and that's what we got. So that's the breakout. You have a nice ABCD structure. This thing points quite a bit higher if in fact it extends. So that's Apple, what it looks like today on that breakout. Let's see what the look at it here on the weekly. And so we're going to have it on the weekly too once it actualizes, which doesn't happen until Friday if it holds. But your ABCD structure doesn't really go anywhere here, right? It's already done it. It's a very small one, and it's already done it. Or it's just about done it. So looks to me like Apple might get a little bit more push tomorrow, and then I would expect it tries to come back in some off of that. And that's partly because of the sector that's in, because sectors influence the actual stocks. As a matter of fact, if we pull it up and look at it, you can see it's in the XL. Well, actually, Apple's in the XLY because it's components and stuff, right? Or at least they have it listed there instead of the XLK. But it's also influenced by XLK. You have both. We pick the major component that it's part of, which is the XLY. Even that one's extended, but it is still bullish. Apple's kind of young, so that says it can go farther. So what I would expect, when you look at that and we go back over here to the daily, what I would expect is if we do see a little bit of an extension and then a pullback, you come back in, and then another concept in Neoclassical is the retest regenerate. So you come back in, you retest, and if it continues to really be bullish, then it should regenerate, and you'll get a nested ABCD structure up inside this larger one. And that's powerful when those happen. So Apple may set up that way. I think actually the odds are not bad that it may set up that way. Got farther to run, but it's going to take it a while to get there. Folks, that's it for tonight. I will be back tomorrow. We'll tackle it again. I'm looking for a little bit of follow through to the downside. And why is that? Well, because if you look across all these time frames and all these sectors and indexes, mainly the sectors at this point, you need the MTTFs to reset. And that's what they're working on. Have yourself a great one. I'll see you next time.